Well, hello, and welcome back to Principles of Accounting 1. I'm your host, Dr. B, and today we're going to be talking about accounting information systems, and we'll also be talking about cash. Before we jump into today's lecture, I want to bring up a couple of quick housekeeping notes. We are in the spring 2022 semester, and we're in week 4. So, what does that mean, week 4? Because we're in week 4, that means by the end of this week, we will have completed half of the course. Remember, this is an 8-week course. Half of 8 is 4. So, we will be halfway through the course by the end of this week. We will be, that means we would have covered chapters 1 through 8. So, let's recap. In the first week, we covered chapters 1 and 2. In the second week, we covered chapters 3 and 4. In the last week, we covered chapters 5 and 6. And then this week, today, we're going to cover chapters 7 and 8. Now, please pay very, very close attention to what I'm about to say. We're in week 4. That means we're halfway through the course. Remember, it's an 8-week course. So that means that this week is going to be extremely busy. What do I mean? Well, instead of having 2 assignments due this Sunday night, you actually have 3. Here's why. You have a Chapter 7 quiz, which is on accounting information systems, and that's what we're about to talk about. You'll have a Chapter 8 discussion board talking about cash payments, the voucher system, etc. And then, the midterm exam. The midterm exam is due Sunday night, along with the Chapter 7 quiz, the Chapter 8 discussion board. That's a lot of stuff, okay? So, my recommendation for you is the following. Complete the Chapter 7 quiz as early in the week as possible, i.e., today, tomorrow, Wednesday. Get it done early. Yep. Chapter 7 quiz, get that done real early. Chapter 8 discussion board. Just like previous discussion boards, full paragraph responses, initial post, full paragraph responses to your classmates. Chapter 8 discussion board. Also due Sunday night. So my recommendation is Chapter 7 quiz, do that early in the week, like today, tomorrow, Wednesday. Chapter 8 discussion board, get that done also early, please. Thursday, Friday, Saturday. And then Sunday, take the midterm exam. The midterm exam covers chapters 1, 2, 3, 4, 5, 6, 7, and 8. First half of the course, right? Chapters 1 through 8. The midterm exam is roughly, last I remember, it's about 10 questions. That's an average of 1 question per chapter. So you're saying, oh, Dr. B, how do I study for the midterm exam? Well, the midterm exam, the best approach to studying for it is to remember a couple of things. Number 1, it's open book and open note. Well, that makes life pretty easy, doesn't it? Open book, open note, midterm exam. You have the PowerPoint presentations, the homework assignments, the lectures, all of that stuff, and it's open book, open note. So, having said that, there's no reason why you shouldn't score the highest possible grade. If the midterm exam is open book, open note, it's 10 questions. That means there's 1 question from each chapter, thereabouts. you should do fine. So again, this Sunday, it's real busy. You got your Chapter 7 quiz, Chapter 8 discussion board, and the midterm exam. Please don't waste any time. Also, I will not accept the midterm exam late. Let me say that again, because some of you probably didn't hear me. I will not accept the midterm exam late. Do not screw up. Get it in on time. I will not accept the midterm exam late. Some of you need to hear this a few times, yeah? Please, don't screw up. Get it in on time. I cannot and will not accept the midterm exam late. Very simple. So, having said all that, it covers chapters 1 through 8. It's about 10 questions, a mix of true, false, multiple choice. My recommendation for success is to review chapters 1 through 8, homework assignments, quizzes, read through the PowerPoint presentations, review the lectures. It's open book and open note. The exam is open book, open note. So again, there's no reason for you not to ace this exam. Yes, please. Celeste.
Do we have to use the lockdown browser to take the exam? And if so, no, so we can, if we have our notes on our computer,
Totally
we can
fine.
access that.
Absolutely.
Perfect. Thank you.
Yep, you got it. So make sure that second browser window is open, ready to go. Good question. Yeah. Any other questions on the midterm exam? Y'all good? All right.
Quick question. What chapters are they covering again?
Chapters 1 through 8. 1, 2, 3, 4, 5, 6, 7, 8. Yep.
Awesome. Thank you.
You're very welcome. Do appreciate it. Okay. Any other questions? Are we good? Jump into chapter 7? All right. Let's jump into chapter 7. Okay. Accounting information systems. This is a very easy chapter. I promise. There's not a lot to it. It's very, very straightforward. Any kind of information system is, in today's day and age, pretty easy to understand. It's just a database. It's a database that contains accounting information. Think of it like software, like Excel, like QuickBooks, like Sage, like you name it, right? It's a piece of software, and it manages the accounting information. It manages the information that we accountants put into it. That is an accounting information system. And I'll break it down for you. What kind of information is in an accounting information system? What does it mean for the accountants? How does it help us to generate financial statements, etc.? And an accounting information system, again, it's a database. And it has data from transactions and events. It puts them into financial statements, reports. And it helps to communicate information to decision makers. We put a lot of information into accounting information systems, from making journal entries, entering bills, paying the bills, receiving cash from our customers, putting sales into accounts receivable, etc. These are all based off of the transactions. So we put transactions and events into the accounting information system through, which is basically your software, your QuickBooks, your Excel, your Sage 50, your Oracle, whatever, right? They're all accounting information systems. All an accounting information system is a database where all you're entering the transactions And the transactions create the financial statements, income statement, balance sheet, statement of cash flows. And it's all housed here, you know, in an accounting information system. Let's talk about the inputs. Oops, sorry. Let's talk about the inputs. We start with source documents. We remember that a source document could be something like an invoice, a check. A source document could be a packing slip, a purchase order. It's the paper, right? That started this whole transaction to begin with. That's the source document. That's what we call it, yeah? And I'm sure we talked about the concept of having a paper trail, right? It's important that we have a paper trail for the transactions for a couple reasons. One, to validate what we entered in is correct. Two, if we ever get audited, that we have supporting documentation, right? Source documents. So we take our source documents, we enter the information from the documents using a keyboard or a scanner. And that information goes onto what we call the general ledgers. We'll enter some journal entries, and all that information goes onto our financial statements, income statement, balance sheet, statement of cash flows, statement of retained earnings, and any other reports that management wants to see. And all that information lives either on a computer or on what we call the cloud. And we can see that information whenever we need it. That's basically the flow of information. In today's day and age, we probably don't store things as much on our computers as we used to because it lives on the internet. So, for example, when I first started out, when I first started talking about information systems, I used to use QuickBooks on my computer. Yeah, very simple. You know, a lot of us who have small businesses, we use QuickBooks or something like it for our accounting information. And we might use the desktop version. That's the version that lives on your computer, yeah? And you didn't have access to that if you didn't have your computer. Yeah, real simple. The software is on my computer. The information's on my computer. I can't access that from anywhere, but you can now, right? So later in life, I decided, hey, you know what? I'm going to move to QuickBooks Online. So that way I can access it anywhere on the planet. I don't have to be near my computer. I just got to be somewhere online. That's what we call cloud storage. Yes, Shanae.
No, that was an accident, Professor.
No
Sorry.
worries. It's okay. I'm just checking. You know, I want to make sure everyone's all right. So the nice thing is, with today's day and age, you can view your accounting information from anywhere, as long as you have internet access. That's what cloud storage is all about. It lives virtually on the internet, which is nice. Just got to make sure that's secure. And you know, you can view it using any device. Really, it's very. In today's day and age, the technology has really improved. So, being able to share and see information, accounting information, is very simple. That's kind of the flow. That's kind of what it looks like. Go ahead, Zach.
Just a quick question about when did you see this change happen? When did you see like the change to cloud computing in workplaces?
Yeah, great question. So it's been happening over the past probably 12 years or so, maybe closer to 15 years. I didn't start that evolution until probably 2009 thereabouts. Because before 2009, in the early 2000s, the internet was still kind of in its infancy. Late 90s, early 2000s, the internet was not widely available. It was still in its growth phase. And so the vast majority of information lived on the computer, lived on the PC, right? And that was how we did all of our accounting. It was using software, but we had no way to communicate that software. It was just lived on the computer. So that's how I did all of my accounting was on like the QuickBooks desktop version of the software. And then when the internet became more widely available, more efficient, and then cloud storage became a thing. So what it means is it's basically like a virtual hard drive where you're saving information to a virtual storage device. And there's a lot of different versions of that now. For example, Microsoft had the Microsoft 365 program that most of us are running. That you have access to what they call OneDrive. It's basically a virtual storage device. It's like a virtual hard drive, yeah? Or if you use Google, you have access to Google Drive, and that is a virtual storage device. The reason why they call it cloud storage is because you can access it from anywhere, etc. I'm sure Apple probably has stuff, right? What they call iCloud or whatever. Sorry, I'm an Android person, so I really don't know. But I'm guessing that Apple probably has like an iCloud or whatever, and you can access. Is that
You're right, Professor. It's iCloud and
Oh,
also
is
on
it?
Android
Okay,
version
cool.
too. So I know
Thanks,
you
Mike.
relate.
Thanks, Mike. I thought I was making that up. But that's cool. But yes, but the whole premise behind it is that you can save your information, your accounting information, and access it from anywhere. But that didn't start happening until probably around 2004, 2005. And then it really didn't start taking off until about 10 years ago. So I hope that helps to answer your question. Sorry, I went the long way of answering it, but I didn't see the transition until about 2009 is when I started saving my accounting information to QuickBooks Online. And it was a process. It wasn't easy making that transition because basically you're taking physical hard drive files and then putting them into an online service. So that was a challenge, to say the least. Go ahead, Zach. Zach, you good? Yes, no, maybe. You're on mute if you're talking. You good, Zach? I'm gonna pretend yes. I can't hear you. Okay. And Celso, you're good, right? Can you? Great.
Oh, sorry.
That's okay. That's all right. I just want to make sure. Cool. Okay. And the good news is you can all still hear me. So, all right, cool. So that's the concept. That's a concept behind being able to access your information from anywhere. And I still use it. I still use QuickBooks Online. Of course I'm using the accountant version now, but it's nifty, because you're not going to move your desktop PC around. You might not always have your laptop. Now you can even access your accounting information on your phone. So I mean, it's pretty cool. In your accounting information system, there's a lot of different ledgers. Yeah. There's an area for you to access information like your sales, your cash receipts, purchases, cash payments, and you can make general journal entries, among other things. Obviously, these are really old screenshots. It's a lot more advanced than this. But the point is, you can access and organize information from your accounting information system in a logical way to be able to make decisions. Like I could be like, oh, how did my one product line sell last month? Because let's say you have a business, and you have multiple product lines or SKUs. You can identify how your sales was from each product. Looking at the sales journal, or you could say, you know what, I'm not quite too sure how my cash flow is doing. I can see the report, but I'm not quite too sure about cash coming in from customers. You can look at the cash receipts journal, or let's say you're going to make a couple of purchases for the business. Look at the purchases journal, right? The point is, you can look at all of your transactions through these journals to make decisions. You could say, oh, I could see my cash coming in, cash going out. I could see my sales. I could see what I'm purchasing. It helps to organize the information, right? And that's the overall point is in your accounting information system database, whether you're using QuickBooks or Sage or FreshBooks, Mint, you name it. There's so many different softwares out there now. But the overall point is it organizes it in a logical way for you as a business owner or manager to make decisions. We know that we have accounts. Yeah, obviously. We have cash, accounts receivable, inventory. We have our property, plant, and equipment. All of those are assets. Under our liabilities, we have accounts payable, wages payable, taxes payable, notes payable, etc. Anything we owe is a liability. And then we have all of our equity accounts. We call those account names, we call those controlling accounts. And each controlling account has what we call a ledger associated with that account. The ledger tracks the individual transactions that have affected that account over time. So here's a nice visual representation of ledgers. So we have accounts receivable. We know that that's a controlling account. That account, if I open up that account, I can see all the details, right? Think of it like a database. You have a high level of accounts. You click on each one, and it opens up, and it shows you all the detail in that account. That detail, we call those subsidiary ledgers. So you have your controlling accounts on your general ledger. You open up those accounts and you can see the detail. And we call that detail subsidiary ledgers. It's like being able to see everything that adds up to the total. So, for example, let's say I have a lot of different customers and they pay me in all kinds of different ways, right? But let's say I want to know how much each customer owes me, right? So to find out, I would look at my accounts receivable because that shows me everything that my customers owe me. So in this example, I have 3 different customers. And they all owe me something, right? I don't know how much each customer owes me until I look at the subsidiary ledgers. All I can see in the accounts receivable is a dollar amount. So in order for me to see the detail that makes up that total dollar amount is to see what's in the subsidiary ledgers. So if I add up my 3 customers, what they all owe me, that will equal my total accounts receivable. Make sense?
Yes.
Yes.
All right, cool. And it's the same way with accounts payable. With accounts payable, the general ledger shows me the total amount that I owe for my bills. I don't know what I owe to each individual person or company. So I need to see the subsidiary ledgers. And it tells me exactly who I owe the money to and how much. It's like seeing the level of detail. That's what it's all about. And within that level of detail, we can see all the transactions. So think of your general ledger is like the parent, right? And the subsidiary ledgers are the children. So you got your parent, that's the top level. Yeah. You got the children, they're the second level. And the children, they also have detail. So I can drill down all the way down to the individual transactions. This kind of shows us the flow of how it all works. So we see the sales journal, that's all of the individual sales that I made. And it shows me who the account, who it belongs to, the invoice number. It shows me the dollar amount. And I can trace all of that back to the respective accounts. And ultimately, it rolls up to the general ledger. So that's kind of cool, right? Like all this is a graphical representation of the different levels. The general ledgers at the top. Within the general ledger, you have your subsidiary ledgers, like accounts receivable, accounts payable. And within those subsidiary ledgers, you have the journals, which is where our transactions live. And we can identify each transaction back to the subsidiary ledgers all the way back up to the general ledger. So it just kind of shows us the flow. And I can validate how much each customer owes me based off of those ledgers. I'll say, oh, yep, I sold that to this customer. I sold this to this customer. This to this customer. And tells me the balances for each customer. That's the nice thing with these sales ledgers, right? It validates that the amount each customer owes me is correct. And I can also validate that my total accounts receivable is correct by adding up what each customer owes me. It's a nice way of validation to ensure that your accounting information system is accurate. Here's probably the more important parts of this chapter, or of our discussion. Within those transactions, we can also see if there was a return of merchandise or if there was like an allowance made. So sometimes you'll see a transaction where one of your customers returns some merchandise to you. Well, let's say it's like let's say you have a clothing store. Oh, the shirt didn't fit right. I just didn't like it. Whatever, they brought it back. So we have an account called sales returns and allowances. So we would debit sales returns and allowances and credit accounts receivable to reduce the account receivable for that customer. And so you'll see this type of transaction in the general journal. Cash works the same way. Cash has what we call a cash receipts journal that rolls between the accounts receivable ledger and the general ledger. Our cash balances changed based off of the transactions, right? We got cash coming in from sales we made to customers, and we have cash coming in from customers that we sold on accounts receivable, and now they're getting around to paying us. And then, and of course, we have cash going out for various reasons, day-to-day operations. But we see that our cash total, we can see our cash from cash customers and cash we received from accounts receivable. And we can see how each customer's account is affected based off of the changes in cash. And this is a part of what I'm showing you right here. This is, of course, the assets part of our balance sheet. We have cash, accounts receivable, inventory. And we can also see how our cash affects our accounts receivable, because we're receiving cash from our customers that bought from us earlier. We could also see how cash is affected from cash customers based off of sales. So there's a way to check to make sure that your cash amount is correct and your accounts receivable amount is correct. And that's by taking your cash minus any sales discounts, minus any cost of goods sold, or I'm sorry, plus your sales discount plus your cost of goods sold, and that'll give you a total. You can verify that your cash is correct by comparing that total to the total if we add up accounts receivable, sales, other accounts, and remaining inventory. Any questions, or it makes sense?
Makes sense to me.
All right, cool.
As well, Professor.
Great. Miss Edwards, makes sense?
Makes sense, Professor, to me as well.
Great. Awesome.
Yes,
Great. Just wanted to make sure everything's making sense for you.
yes, Professor.
Yeah.
The
Good.
computer went down. It blacked out. I had to come back in.
Oh, okay. Well,
I don't know what happened.
I'm glad that you're back. No worries. So, in your mind, just think of it like a database. You have your top level, that's your general ledger. And then you have within each amount in your general ledger, within your general ledger, you have a bunch of different accounts with a balance. We can see the detail of that balance when we select the subsidiary accounts. And we can see the detail of those subsidiary accounts when we look at the journals. So the total journals equal the ledger accounts, which equal the general ledger amount. So it's just all about seeing the different levels of detail. We do that for payments. We do that for purchases. You do that for for almost all the accounts. And that's the nice thing about the accounting softwares, is that they really do keep the business on track. And as a business owner, you want to be able to see the level of detail. And that's how you can track, what you have. And you can make decisions. So we need to make sure that our ledgers are correct, right? I mean, how do we verify if the ledger is correct? Well, if I add up everything and I get to my total, in this case, accounts payable, it should balance, and it should equal the accounts payable total in the general ledger should equal the total I have from all of my customers. It's like saying it's a way of validating that your accounting information is correct. And of course, the same concept applies with cash. I have cash paying customers, and I also have to pay cash out for my bills. And so I do the same exact thing. So if I have an accounts payable, or if I have, I can show that when my accounts payable went down, my cash went down. My inventory went up, my cash went down, right? It shows the cash going out, and for the various reasons based off of the subsidiary accounts, and all that rolls up. Just a way of thinking about the levels of detail. You have your general ledger, then within the general ledger you have your subsidiary accounts, and within your subsidiary accounts you have the journals. It's just the levels of detail. Yeah, that's the way to think about it. And of course, once in a while, we need to make journal entries that don't necessarily fit that level of detail, right? We call these general journal entries. And we make these for a couple different reasons. Things like, oh, I'm buying a building and I'm using a notes payable. I need to do a general journal entry for that, because there's not going to be, it's just not going to fit one of those categories. Or if I receive cash for a loan that I issued to someone else, it's rare, and so I need to do a general journal entry for that. Or purchases and allowances, returns and allowances. Sometimes, you get those weird things that happen with a couple sales, so you need to do a general journal entry for that. And when you do your general journal entries, they affect the general ledger. Everything in accounting information is driven by software. And there's so many different pieces of software out there, it's insane. Like I said before, I started with QuickBooks desktop version, and then I moved into QuickBooks Online, and now I'm using QuickBooks Accountant. And it's all online based. I can access it from any computer, any phone. That's the beauty of today's technology. You can access it from anywhere using any device. So QuickBooks, Sage 50, Oracle. There's so many different, FreshBooks, Mint. There's a ton of different softwares out there for accounting. It doesn't matter which one you select. Okay. There's a couple of preferences. Like the most popular piece of software in the United States for accounting is QuickBooks. The reason for that is they're driven towards small businesses. Most small businesses use QuickBooks. A few small businesses might use a different piece of software, but they have the majority of the market here in the United States is QuickBooks. And it's so automated now, it just makes your life as a business owner a lot easier. All you do is you take your information, you're entering it in. You don't have to do all this complicated stuff. It's you have your source documents. You enter your source document information into the software, and it'll generate the income statement, balance sheet, statement of cash flow, statement of retained earnings for you. So that way you don't have to be doing this manual process to create those statements. And it's similar to like remember when we talked about the perpetual inventory system? It's kind of like the same way. It keeps everything up to date at all times. And you know, if you have a small business and you're not using accounting software, you should strongly consider doing that, because it will save you a ton of time and aggravation and possible problems down the road. And with pretty much everything being online, the data is available immediately once you put it in. It's just very, very simple. Oh, another thing I wanted to talk about real quick is called batch processing. Let's think of like a convenience store, okay? Or you go to the gas station or whatever. You go somewhere, you go shopping. And any retailer does, almost all retailers do this. It's called batch processing. You ever wonder why sometimes you look at your bank statement and you see this thing processing, this one transaction, it's just kind of chilling out there for a couple days under processing or in process, or you know what I'm talking about? It hasn't hit your account yet, but you can see it sitting there.
Yes.
Yeah, yeah. It happens to all of us, right? It's like you look on your bank statement, you're like, "What the hell is this?" It just says processing, or you're on your app and you just see it. It just says processing or in process, and then a few days later, it'll post. That happens a lot on weekends, right? So like you go out to a restaurant on the weekend on like a Saturday night or whatever, and at the end of your meal, they show up with a bill, and you use your bank card, and then once it swipes, it doesn't hit your bank account right away. It just says processing, in process, and it won't hit your account until that restaurant closes the batch. Okay, what I mean is there's a lot of card swiping going on at a restaurant, at a retailer, at a grocery store, at a wherever, right? You're constantly swiping that debit or credit card. It won't hit that account until that vendor, that person that sold you whatever it was, closes their batch. So at the end of the night, what happens is they go around to the credit card machines and they click close. Okay? And so what it does is it closes the transaction. It processes it, and then it hits your account. It all depends on when they do that. Most places do it every night, okay? Every night, daily. Some places do it once a week. Depends on the size of the vendor, really. Some places do it once a month. I don't know who's doing it once a month. Most people want cash right away. Yeah? So the point is, they gather all these transactions at one time, and then they close the batch, and it processes all those transactions at once. It's kind of cool, but at the same time, if you're on the customer end and you see something sitting out there for several days, it's kind of irritating. But I just wanted you to know why that happens, because so the next time you're looking at your bank your bank app, or you're on the website or whatever, and you see processing or temporary authorization, whatever they call it, you see that, and if you're ever wondering why, that's the reason why. That vendor hasn't closed the batch out. But yeah, the information is always is accessible on any computer as long as you have access to the cloud, to the cloud information. Oh, another one, ERP. we call this Enterprise Resource Planning, ERP. And it's just accounting software. That's all it is. But in addition, the other thing the accounting software can do for you is it'll manage your inventory. It'll say how much of each item you have on hand. It'll tell you information about the sales of each product. It'll tell you what kind of assets you have in your business. It's kind of cool, actually, and it's very efficient. So, like when I was selling products, I would enter my inventory in to my QuickBooks, and it would tell me exactly what I had available on hand of each product. That's how a lot of retailers know what they have available in their inventory is they're using their accounting system. It's called Enterprise Resource Planning software. All it does is it manages the inventory and assets and accounting and other information. For those of you who are like HR managers or HR people, you probably also use this and don't really know that you use it. What I mean is, when you're entering payroll, that is a part of enterprise resource planning. Because when you're entering the payroll information, hours worked, hourly wage, all the deductions, right? All of that is a part of enterprise resource planning. It hits the budgets for payroll. Just things to think about that you may not think about. But everything right now, these days, everything's accessible by the cloud. All the cloud simply means is I can access my application from anywhere, at any time, on any device. So I can access my QuickBooks on my phone, on my laptop, on my tablet, on my computer, on my whatever. It's all there. Okay. Here it is. Here's the one. I knew you were waiting. You're like, man, Dr. B hasn't shown us any ratios today. Here it is. Okay, the one ratio for today. Or for this chapter anyway. Days payable outstanding. This ratio, and this is probably the one ratio I want you to remember for a certain midterm exam from this chapter. Days payable outstanding. This ratio tells me, on average, how long it takes me to pay a bill. How do I calculate that? I take my total accounts payable divided by my total cost of goods sold times 365 days. Tells me how long, on average, it takes me to pay my bills. Right? That's a nice piece of information to know because it helps you to plan for future purchases and to plan for cash flow. Any questions, comments, concerns about accounting information systems? Like I said, that was a quick one.
No, sir. Still on it.
Mike's still good. All right, cool. Okay. I'll stop this recording and we'll start the next one for our next chapter. Stand by.